GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as satisfying as squeezing in one last summer barbecue. I'm your host, Jay Hamilton, and today we're joined by Zeneca. We'll be answering a few important questions. Will this cycle be different than past cycles? Will the 4-year cycle continue forever? When will it end, if it does end? And is this cycle the start of a super cycle? Now, before we jump in, 56% of you do not subscribe to our channel. Subscribe by the end of August and you could win a free Milk Road Pro annual subscription valued at $250. Check the details in the show notes. Now, today's episode is all about cycles, but if you're invested in crypto, I'm sure you own some ETH. And if you do, you probably want some extra yield on that ETH. Check out Kelp's new product, Gain, right now. Get ready because your reward farming game is about to level up. Introducing Gain, powered by Kelp, your DGen concierge. Gain is an automated vault launched by Kelp that maximizes rewards for ETH users. It offers one-click access to airdrops and points from leading L2s like Linea, Scroll, Karak, and more. Here's how it works. Head over to milkroad.com/KelpGain and spot airdrop Gain. Get a complete overview of how your assets are deployed and the rewards and points you stand to gain. With just a few clicks, deposit ETH or SETH or liquid staking tokens into the smart vault. That's it. The best part, once you deposit, you're issued a liquid token, AgETH, enabling you to participate in DeFi on Pendle, Spectra, Lyra, Splice, and others. Gain is already live and you can go check it out for yourself today. Just head over to milkroad.com/KelpGain and get started. Zeneca, welcome back to the show. Let me start off with, in the past decade, it's become undeniable that we have these consistent 4-year cycles in the market, which if you step back seems almost ridiculous that markets could be that predictable. And it's kind of led everybody in crypto to feel a bit like, oh, that's just the way cycles work. They always follow the halvening and these 4-year cycles. Will these 4-year cycles last forever? What are your thoughts?
No, they won't. Like, that's end of podcast. I think everyone, if they're being honest and think about it, can agree that these 4-year cycles will not last forever. They can't. If it just happened that every 4 years you'd have like a bull market that tops, 12, 18 months after the halvening, and then a 3-year bear market, and then a bull market again, and it just kept happening every 4 years after 4 years after 4 years, more and more people would take notice. More and more people would like just buy the bottom and sell the top. And when that starts to happen, it just changes the dynamics of the market, and it just can't possibly continue forever. There's no infinite money glitch like that that exists forever. It's kind of worked for the last couple of cycles, but I think even last cycle in 2020, 2021, a lot of people were saying similar to what I'm kind of saying now, which is these 4-year cycles can't keep going. It's going to be different this time. You can't just pretend or predict what's going to happen this time based on last couple of cycles. And then it did happen. And what I've heard people say in response to that is now, well, you know what? I'm just going to believe in the 4-year cycle until proven otherwise. I think it's worked in the past. I've even thought this and said this myself as well. It's worked in the past. It's lining up like it might work again. Let's just believe in it and just like buy and sell accordingly. And then at some point we agree it's going to stop, and then we'll change our strategy. And I think that's kind of fine and kind of reasonable. But I think the pendulum might have swung too far back, where I think too many people are now just sort of relying on these 4-year cycles and making significant financial decisions based on the expectation that things will follow along like they have in the past. And I think that's where things start to get extremely risky and dangerous, is when people expect and rely on the future to play out like it has in the past.
Now, obviously, there's a reason for these 4-year cycles. Can you just sort of touch on a couple of the factors? Like, these aren't totally random's not the word, but there is a lot of factors that are affecting this and causing this 4-year cycle. Because if we understand the factors, then I think we might be able to say, hey, is this the end now? Or is this going to continue for another few cycles?
Yeah. So, I mean, the most obvious and jarring one is the Bitcoin halvening. Every 4 years, roughly, the amount of supply that's distributed to miners is halved. And as supply goes down, if demand stays the same, price will go up, and let alone if demand goes up. And so that's been a good reason that people have always pivoted around these 4-year cycles. And you combine that with things like the M2 money supply and interest rates and just general fiscal policy, and you can really start to see, oh, there's a lot of external factors that also contribute to this cyclical rate of the cyclical 4-year cycle. And I don't want to dismiss those because those are important factors and they're worth paying attention to. And they are very valid reasons for why we see number go up and down predictably on these 4-year cycles. But I still just believe that it can't continue forever. And I've been reading and watching a lot of the author Morgan Housel lately. He wrote The Psychology of Money, and he has this great quote where he says, "Try and think about the next big market crash, or the next the things that will cause people to lose money are things that you cannot possibly predict. You can't fathom what's going to happen. COVID, 9/11, wars, all these kind of things." And there will be something like that happens again, and it completely throws everything off kilter. And I think that far too few people are sort of preparing for that. And everyone's just like, oh, it's going to be rosy, and we're going to have a blow off top in 2025, and then it's going to crash, and then we'll have a bear market for a few years, and we'll go up again. And as the world changes, as people's financial positions change, like there's cost of living crisis out there. There's entire massive macroeconomic problems, geopolitical problems in the world. And I think that it's just too risky in my view now to just continue to rely on these 4-year cycles.
I want to get into, so the question obviously is, how do you plan for it and what next? But before we do that, I just want to mention quickly, and I wonder if you would know this. We did an episode a few weeks ago, link to that. If you guys didn't hear this is an episode with Kyle where he showed us that this has actually happened once before, where we were in a period of 4-year cycles for 20 years following the Second World War. So following the Second World War, I believe it started in, I can't remember I think it started in 49, and every 4 years, reliably, and this is pre-crypto, so nothing to do with crypto, you can follow the stock market and see the exact same 4-year cycles. And you know what's similar to that time versus this time is the monetary policy. Post-war, they printed a ton of money to inject into the economy and get the economy going again, because everybody came back to the war, everybody wasn't working, like it took a long time to get the economy going. And so interesting to know that this has happened again, and it did end that time when it happened. So in the same way, it's going to end again.
It's super interesting. I hadn't seen that episode or heard that, and that's fascinating, especially because you mentioned it lasted about 20 years. And if you think we're coming up on 20 years for Bitcoin after one more quote unquote 4-year cycle, and Bitcoin was in part a reaction to the global GFC in 2008, and money's been printed, and we've had this era of I don't know if abundance is the right word, but just money flowing every which way. And again, it has to come to an end, whether it's now, whether it's in 4 years, whether it's in 8 years, whether it's in 3 years or 7 years. I just think that not enough people are thinking about it. And it's almost the risk to me comes from when it's expected, when it's a given, when you put all your eggs in the basket, when you adjust your strategy based on the idea that it's gonna follow these 4-year cycles. And so you mentioned before, like what can people do about it? What should we be thinking about, and how should we be approaching it? And I think it is, again, ultimately going to change for everyone's financial position. This is not financial advice. Everyone is in a different place in life. But I think about like what would ask yourself the question: what would happen if we don't follow the 4-year cycle? What would happen if in 2025 the markets crash? Or what would happen alternatively if in 2025 markets go up, and then in 2026 they go up again, and 2027 they go up again? Like, I'm not bear posting, doom posting here. I'm just saying there are alternative outcomes, And if you expect the 4-year cycles, you might sell in 2025, waiting to buy back in 2026, 2027. And that might never happen. We have ETF inflows, and we might just have this more gradual grind upwards. And you might miss out on most of those gains because you're expecting this big crash and this 3-year bear market. Similarly, if it does crash next year, you might hold your bags, just thinking, oh, it's just a temporary blip, it's going to go back up, and then you hold all the way down. And so I think by thinking through the various possible scenarios, and anything is possible, like every scenario is possible. World War III could break out and everything could crash 90%. Nothing is off the table. Nothing is guaranteed in life. Think about, like, what does that mean for you? What does that mean for your future, your family? Are you risking more than you should be? Are you not taking enough risk? Like, there are all sorts of things to think about. And I just think these are important questions to be asking yourself.
Yeah, I think it really proves the need for having a very strong plan. And your plan has to involve what is your stop loss and at what points are you taking profit. And too many investors buy without that plan. And it's true. Nobody knows if this is going to be another 4-year cycle. Let me just quickly say, if this is another 4-year cycle, we still have about a year to go if this is another 4-year cycle. So if it is, we still got time. And let's be real, because everybody loves to talk in 4-year cycles, and M2 money supply is picking up right now. So a lot of the alarm bells are going off saying, yes, this could be another one of those. And the election is coming up, which is always good for markets. And so like, but there also is a bit of a self-fulfilling prophecy, right? Like if everybody says it's 4-year cycle, you're going to look for, hey, these are all the things that say, yeah, we're in another cycle. But I think it does come back to, as you said, is don't plan based upon the cycle, plan based upon your financial objectives and your financial needs. And that involves diversification and a simple plan where you are not just leaving everything in one asset or leaving everything on the table, but you're taking profits as you go, your DCA in, your DCA out. Like, it sounds so obvious and so simple, but so many people don't do these things. Where do you think we are at in this cycle currently? How are you planning right now based upon maybe this thesis that, like, hey, these 4-year cycles are going to come to an end?
Yeah. So I've said before, I think that there's probably an 80% chance, that 75 to 80% chance that we get a 4-year cycle, the bull market continues for another 6 to 12 months, and we see a crazy appreciation from here. But that means there's a 20-25% chance that we don't, and that prices either crash significantly, stagnate, slowly go down, some other scenario that's not a giga bull market. And I'm approaching that by doing a bit more selling now at this point in the cycle than I've done in previous cycles. Previously, I just held everything, including not taking enough profits during the 2025 era or the 2021 era, the crazy bull market. And so I understand that I might be losing out on some profits by selling now in case they do go up more in the future. But I'm also hedging against if the scenario is that things crash, I will have liquidity to buy the dip. I think one thing that I talk to so many people in this space, and anytime there's a correction, like we saw with the Japanese market correction of a few weeks ago, people are like, oh, I'd love to buy the dip, but I have no liquidity. I'm all in on crypto. All my money's in Bitcoin, ETH, Solana, meme coins, NFTs. I don't have any spare stables. And I think that is just a common theme across almost everyone I speak to in the space. It is rare when you find someone who is sitting on, 25% of their portfolio in stablecoins, 50% in stablecoins, even 10% in stablecoins. Not that many people, and it's the exception. And so I want to be in that position where if there is another COVID, or if there is some massive, if the whole market crashes 50%, 80%, I'm not going to be running and selling and taking money. Like, I believe in this for the next decade, next 100 years, the rest of my life. I want to be able to buy those dips. I want to be able to seize those opportunities. And in order to do that, you need to take profits at certain points. And so if you're sitting on a balanced portfolio now where you have 10, 15, 20% in stable coins, 30, 40% in Bitcoin, 20% in ETH, Solana, and you're in a fantastic position, and you probably just keep doing what you're doing. But if you found yourself, you're 100% all in on crypto, maybe consider like some alternative scenarios. Again, it depends. If you're 19 years old, you've got a job on the side, you're making some money, you're comfortable with risk, and you want to just set yourself up for life, then great, go all in even play with leverage if you've got a crazy high risk tolerance, and just try and 10x, 100x your portfolio in the next 4 years. Because if the 4-year cycle plays out, fantastic. If not, you're back to square one, but you're young, you can start again. You're not going to.
It's worth the risk, right? Is what you're saying.
I think it is.
It's okay to shoot for a 100x if you're willing to lose it all, because very good chance you will. If it was easy to 100x, everyone would do it, right?
Exactly. So, and like if you're starting with $5,000, it's a lot easier to 100x that than if you're starting with $1 million. It's probably easier to double your money with $1 million than anyway. But there's a concept there that comes to mind. It's the concept of an asymmetrical bet, where the upside is so much more than the downside. And if you think about it, if you hear this with meme coins all the time, like it's possible to 100x or it goes to zero. And going to zero sucks, but 100x can make up for a lot of going to zeros. It's a similar concept when you're young and you take on some risk. Your going to zero is just taking one step back. If you're in your 40s with a family and a house and kids and all these investments, and you go to zero, then that's like taking 1,000 steps backwards, and you don't want to be taking that sort of risk. But when you're young and don't have dependents and all that kind of stuff, you can generally afford to take a risk. I'm not saying everybody should, and there are many multiple approaches, and just like slowly compounding over years is a great strategy as well. But it just depends on who you are and where you are and your risk tolerance and all that.
Yeah. One thing I think that's important to be clear about is, why do people plan around these 4-year cycles, or why are people so attached to these 4-year cycles? Is because the market psychology in these 4-year cycles is very extreme. You go through all the feelings and it's very predictable. And there's just huge FOMO, right? Huge FOMO. And where I think there's really big FOMO is I think there's a lot of fear of the supercycle concept. There's a lot of people who are very afraid, well, if Bitcoin is going to whatever, 1 million, 10 million, Michael Saylor level by 2043 or whatever his projection was, whatever you think, okay, so if it's going to that, well, is this my last chance to buy? So how do you respond to that? And if the 4-year cycle ends, does that mean that it's up only forever, or will there still be cycles? They just won't be predictably 4 years.
There will always be cycles. If you look at any investment market in history, you look at the stock market. The stock market has, compared to crypto, it is just a straight line up. It is no variance. It just slowly goes up over time. Your gains are much lower in terms of percentage, but it's just steady growth. But it's had years where it's crashed 50%. It's had days or months where it's crashed. Like COVID, the crash was like 50% in such a tiny period. It very quickly recovered. But every market will have crashes and corrections. And if you're smart and savvy and save some stable coins in order to buy a rainy day, then you'll have opportunities to buy back in. Now, the question though is like, well, what if we see a quote unquote super cycle, Bitcoin goes to $500,000 and then it crashes and then the crash is like $220,000 or $150,000. Like, you've missed out on being able to buy at this price, and maybe you have, but you got to consider all the alternative scenarios as well. And this is why the best strategy, in my opinion, for 99% of people is dollar cost average in. Just put, $100, $1,000, $500, whatever you can afford every week or every month. Just set a recurring buy of Bitcoin and or ETH, Sol, and whatever other main tokens you want, and just forget about it. And just you'll be buying the top, but you'll also be buying the bottom, and you'll average out. You're just getting exposure to Bitcoin. And so that means if it does run all the way up, you're really happy. And if it runs all the way down, you're also happy, because now you're buying more and you're getting more for the times that it does go up. So it's just the best strategy for literally almost everyone. And very few people do it, which is crazy.
Podcast over. Everybody just DCA and stop trying to think that you're smart. Because I hate to say it, but here's the thing. It's not about being smart. That's the real issue, is markets don't follow logic all the time. They very often don't follow logic at all. We wrote a newsletter that went out today where we talked about pumpamentals versus fundamentals, and how much the pumpamentals impact things often more than the fundamentals. You can look at so much more, right? And so it's but I think the key thing that I really want our listeners to remember and our viewers to remember is there will always be cycles. If you miss this this cycle, if you decide, maybe not miss, if you decide to take some profits or take some money off the table now, because that's the best thing for your risk tolerance, and you're losing sleep or you're just not in that position to feel like, hey, I've got too much risk on, take some off the table. And let's say it pumps and you miss it, and you miss this next banana zone with, in some way, you have some in, but you don't get the full slice of the pie that you're hoping for. It doesn't mean there won't be another dip and another cycle and another bear market. There will be. And so I think that's the thing that I think a lot of people get really caught up in, is this belief that like, oh, and maybe the dips will be less. I'm sure they will be over time. The Bitcoin, especially with Bitcoin, the dips will be dampened because of the ETF and all these institutions that are probably just long-term hold, but it'll still dip. And so if you are in that feeling of like, oh, this is my last chance, then that's another indicator that you're in the wrong position. What are you watching for right now over the maybe September, the next, how about the rest of this year, that might indicate to you that like, oh yeah, we're in it, we're still in the 4-year cycle, or like, oh, we're not, we're in something different?
Yeah, I mean, I think looking to the Fed in America, see if they cut rates and how much they cut is an important part of it. And the election is another huge factor between now and the end of the year, is who's going to win, what's their approach going to be to crypto. Like, it seems like the Trump is pro-crypto, more pro-crypto, seems to be going to do good things for crypto. The Democrats have historically been pretty terrible for crypto, but there's been a few comments coming out in recent times that it seems like they might be willing to, come to the table with some sensible regulation and take it more seriously. And hopefully that's true, and hopefully both parties are good for crypto. One might be better than the other, but we just have to wait and see. And so I think that's a huge part of maybe will dictate the next 4-8 years, just a very long time, because like it or not, America is still the nexus of capital and so much direction of the world. Those are probably the big two, and then just kind of watching how the markets are reacting to this news and also the M2 money supply, and seeing if that just continues to trend the way it is trending. Yeah, that's the gist of it. And I think that again, like I said, I'm 75-80%. I think we follow the 4-year cycle this time around as well. I think it's like lining up very nicely. There's all these catalysts, and I'm very heavily allocated in crypto still, and I think it will happen. But there's always the chance that it won't. So it's just like, it's keeping an eye on these things. And, maybe the Democrats get elected. Maybe the SEC changes, like it doubles down on its hatred towards crypto, starts going after more crypto companies. There are things that can happen. Maybe rates aren't cut as much as we think that they are. Maybe some other thing pops up, and all of a sudden we're like, oh, nobody has any money in the world. And there's a very antagonistic view towards crypto from the American government. Bad things are happening for the next few years. Like, there are different scenarios that could play out like that. So those are some of the things I'm watching.
I want to know, everybody watching and listening to this, what do you think? Do you think we're in a 4-year cycle, or do you think we're in a super cycle, or do you think we're in a regular business cycle and the 4-year cycles are just over and this is something new that we haven't seen before? Let us know in the comments. As I said at the beginning of the show, if you are not subscribed, subscribe to the show now, because you could win free stuff. We're giving away thousands of dollars in prizes right now. Subscribe by the end of August to get free stuff. As always, Zeneca, pleasure to have you on the show. Thanks for joining us today.
Thanks for having me, as always.